Our next guest made the case for that group in October right here in Overtime, and she is sticking by that call today. Let's welcome back Cheryl Young of Rockefeller Global Family Office, ranked on Forbes' top wealth advisors list since 2016, currently number 4 on the top women advisors list, and numero uno, number 1 on the best in-state advisors list for Northern California. The trophy case is full. Welcome back and Happy New Year to you.
Happy New Year, Scott. Thank you.
All right, so we're staying with tech, and almost no one wants to touch that.
I'm staying with tech.
Almost no one wants to touch it. Why?
But Scott, last time you and I spoke just a couple of months ago, we talked about tech. I reiterated my outlook for tech. You look at the SOX index, it's up 21% from our discussion at that point. I think there are a lot of beat up names and still a lot of opportunities. And the PE ratios have gotten to a level that's reasonable now, whereas a year ago, everything was very, very expensive. So I'm seeing a lot of opportunities out there in the tech space still.
Let me ask you this. So more reasonable than outrageous doesn't necessarily make them cheap enough. Why are they worthy of my money now, and why don't they still have some multiple compression to go?
There's a lot of mixed signals, so I don't disagree with you. I think there is going to be pressure on the technology space really until the Fed at least points to a pivot. Whether or not they pivot, if they point to pivot, I do think we'll see a pretty big and strong bounce. But until then, I am fairly bearish on the overall market, not just tech, but on everything. And we've seen tech leading the market down. I think we will continue to see that until the Fed's pivot. I think at that point, we will also see tech leading the market up.
So the market's got a problem until we get that pivot, and the pivot point is the great unknown.
That is the great unknown. And for me, one of the biggest risks to watch out for is the level of unemployment. We've already seen some pretty big numbers hit the tape in December. We know this is going to be getting worse before it gets better. So if the Feds get it right and unemployment has sort of a soft landing and we end up with an unemployment number around 4.5, 5, I think this market recession will be very, very shallow. If the Feds overshoot, which is Rockefeller's outlook is that they will overshoot and probably overdo it, we could see unemployment get a lot worse, and tech will continue to struggle at that point in time. With that said, in every crisis, there are always opportunities. And if I think about the past history of the world, every time we've had plagues, we've had the most major pandemic that we've had in over 100 years with COVID-19. Every time we've had war, you look at what's happening in Ukraine and Russia, this has always led to the most innovation, and that has also led to the most innovation in technology.
There's so many periods of time, though, certainly in more recent history, I know you would agree, we're boosted by the Fed. And this time the Fed is not your friend, it's your foe. And I just wonder if, as I discussed with the prior group in our roundtable conversation about the largest risk lying with underestimating the Fed. And even though you suggest that, the house view at Rockefeller is thinking they'll go too far, that they're not just going to go too far, they're going to stay off sides for a long time.
They could. If you look at bond traders are actually pricing in the opposite. And Liz Young just alluded to this as well. We have an inverted yield curve right now. And when you have a 2-year substantially higher than a 30-year, that is telling us that the markets think bonds will go up, but pull back down in the long run. So I think you have to watch the unemployment numbers, you have to watch the Fed, but you also have to look for the opportunities that are resulting in this, again, crisis. Greg Fleming has built out a platform at Rockefeller of some of the best alternatives out there. So if you're worried about the public markets, you could look at the alternative space. We had 180 IPOs in 2022 versus over 1,000 IPOs in 2021. So I do think in the private space, there are going to be some unique opportunities. And I do think that while there is still a lot of pressure on this market, there are ways of getting in. What I'm advising my clients to do is probably a little bit different than what most people think of, but I am a rock climber, and I look at every opportunity and say, all right, if I'm climbing up this big cliff and I want to stay safe, I'm not going to go free soloing. I'm going to stay on ropes. I'm going to stay attached. I want to make sure my belayer keeps me tight. So I am pairing every trade with options where I'm selling a call and using the income from the call to buy a put. And that way my clients can stay invested, but have the downside protected, but still have some nice upside. And more importantly than anything, an income plan so they do not have to sell during a down market.
Understand it completely.